Good morning, ladies and gentlemen. I hope you have all had a fruitful day yesterday and enjoyed the evening. We are ready to start the last session of our meeting in Duesseldorf. As always, we are going to be listening to the chairman of respective IREPAS committees today. First of all, the chairman of the committees will be sharing the conclusions of their committees one by one, and then they will be answering the questions. So I just want to repeat once again, as always, that you are more than welcome to stop me at any time and direct your questions to the chairman of the IREPAS committees. So let me introduce the chairman of the committees. You know all of them very well, but just to confirm, Mr. Jens Björkman, representing the Raw Material Suppliers Committee, Mr. Willem Alf, representing IREPAS Traders Committee, and Mr. Murat Cebecioğlu, is representing IREPAS Producers Committee, and also he is the chairman of IREPAS. So shall we start with Raw Material Suppliers Committee, Jens? Yep. Please.
Okay. So thank you for the delegates pitched in yesterday at the Raw Material Committee. In total here in Duesseldorf, we are 76 participants registered, and I think we're from 38 different companies, so quite a good turnout here in the Ruhr area. The past months has been fairly dramatic on the ferrous scrap side with substantial price decreases. So I'll just run through some of the points that were discussed in general conditions. So in general, trade barriers are affecting growth negatively and thereby also our business and scrap generation in general. Trade barriers are coming from the bilateral trade issues, for example, between the United States and China, Turkey and the United States, Pakistan and India, South Korea and Japan. And they're all contributing to this slower growth in the past year. And then during yesterday we had a lively discussion about free trade. Russia has recently imposed export quotas and license systems for scrap exports, which is limiting the availability from Russia. And it's a protectionist measure for the domestic steel industry, which in the coming year will likely limit the possible tonnage for the exports. There's a large debate going on about the automotive industry and the slowdown, which is affecting the whole supply chain within both aluminium and the steel industry. So for the recyclers, it's a very big challenge, as it's one of the larger industries that the recycling industry adheres to. A problem in the last year for German recyclers has been the insufficient availability of incineration capacity for the waste fractions from the shredders. So a part of the shredded material is waste that normally has traditionally gone for landfill. But when it's organic material, it needs to be incinerated in Europe. And in Germany, there's a lack of incineration capacity, which is also then hindering the capacity for shredding. So not only is there a pricing issue on the ferrous side, there's also problems for the industry because of this. And we discussed it last year also. I think the seasonal problems on the Rhine River with low water levels. We are again experiencing low water levels in the Rhine River systems, which is also adding difficulties for the logistics operations. And while we're at it on the logistics, we are nearing the 2020, and at 1st of January 2020, the new IMO regulation stipulates lower sulfur dioxide emissions from ships. And this will raise logistics costs. It already has, because ships are already docking to install scrubbers. So the availability of vessels on the ocean-going vessels is currently reduced and will be for the rest of the year. And so in the past months, we've seen significant price hikes for logistics. And the major sort of challenge is currently the Turkish recession, which is contracting the demand for construction steel and demand for scrap since Turkey is such a large importer of the material. And likely that will go on for some time, at least for the next year, and which in turn generate lower scrap prices as the demand is coming down. As long as the demand is coming down, we will likely see this. And prices for scrap are currently trading at 3-year lows after the collapse in August and September. And as an effect of the dramatic price reductions, we also see fairly dramatic scrap generation inflow is coming down quite dramatically. So a lot of the delegates witnessed that generation inflows, scrap inflows was down by something like 15 to 20% at least. And that will likely then also generate less availability going forward. So, yeah, that was my positive comments for today.
Thank you very much. So, shall we continue with traders, Willy?
Yeah, so we went through a couple of issues like trade cases, raw materials, and in particular Turkey was always a question, which is of course for our long product trade one of the most important countries since decades. So yeah, the questions were to what extent the trade case between the US and China is becoming to an end, or is there a chance that it will come to an end? And the participants were of the opinion that this will probably go on as long as the administrations do not change, and that in anyhow or in any case the result will not change much, because the Chinese are not in the US market really represented because of all these trade cases, anti-dumping issues and so on. So this will certainly not have an effect. But on the other side, also for Turkey, it will not have a big effect. The new anti-dumping rates which are reduced will not really help to increase their presence in the market because they simply cannot compete with domestic and with Mexico, which has zero duty. So an ongoing question was also who is better, electric arc or blast furnace? And well, right now with the current spread between scrap and iron ore, we were of the opinion that right now there is definitely an advantage of $40 to $50 for the iron ore, for the electric arc furnace mills rather than for the blast furnace mills. And yeah, we expect that this gap will come more to a balance in the near future because scrap seems to be at an end with the falling prices, and we probably see a rebound because some of the mills reported already that they hardly find, at least in Europe, sufficient scrap at the price they are looking for. So it looks like that they are that the scrap dealers are holding back a little bit because the replacement cost for new scrap is probably higher than the ones they would sell right now. So with Turkey having reduced the capacity utilization to approximately 50%, Murat will have probably more better figures and correct figures, but this is of course a substantial reduction of material which is available in the market, but it's also at the same time looking for markets. Since America is gone, the European market is almost completely utilized by the quota. So the Turkish mills are now looking more in the Far East market and in countries like Africa, Israel, Yemen, and so on. So these are probably the markets they will target now. And they have already taken away some shares from the Chinese mills who were dominant in the Far East markets, and the Chinese right now cannot really compete with their blast furnaces, having the disadvantage of the iron ore price. Anyhow, what we've seen is that the Chinese mills have produced much more material again than in the past. The production increase was approximately 10% according to figures which we received. But most of that, if not all, was consumed domestically, and it was put on stocks because the mills are obliged to produce not only, there was a saying, a social restocking, so that the mills have to produce just to stay and keep the people working, and that the whole industry is running. So if they cannot sell it, they will put it on stock, and the majority of this material went on stock, and that was a reaction to the price decrease we've seen lately in China. So we came to a question of the role of a trader, which has always been asked by many people, and yeah, we have seen that the role of a trader is becoming, in some phases, more and more imminent and vital, because the trader is a risk taker. We've seen that, in particular, after the safeguard was introduced in Europe, many customers who were able to import on their own from the financial point of view were just afraid because they did not really know all the impacts which could come up. Of course, they don't have the overview of the flow of material into particular areas, and so a trader has here simply more know-how and is also taking risks for the supplier and the consumer. So the next point we had was Brexit, to what extent Brexit is having an impact to the steel trade. We have said that on the automotive industry, certainly the Brexit has already a quite significant impact. We've seen that a lot of producers for automotive have reduced their products for this market because there is a lack of demand. Others said that in preparation of a hard Brexit, people have stocked material already in the UK to be prepared and to have sufficient material when the Brexit is coming. However, others said, no, we don't see that at all. We see that it's more or less a regular trade and nothing really has changed. It looks like people are just sitting there and waiting what's going to happen because the uncertainty is so big that you really don't know what to do and to what extent you should prepare yourself. So the IMO was also discussed by us, and we have got a good comment that probably this will lead to more container shipments, even for steel. There is a lot of material which is designed to be put in containers, like plates, like merchant bars, like special products, and it was said that even for some countries like Africa or so on, you have to do it anyhow because the quantities are not that big. It's certainly nothing which you can do with bulk cargoes of 10,000 tons, but you can certainly do it for smaller products and for smaller items. And then a container is a pretty vital alternative. And since the container vessels are usually much younger, they have not this problem with the environmental issue. So, on the countries, Latin America, Central America, and so on, Don Bijssel commented that those are all in big trouble right now, with the exception of Mexico, which he considers as, they consider themselves more as North America rather than Latin America or Central America. Europe, I have commented that we have a pretty good market. In Germany, the demand is robust. Also in Belgium and in the Netherlands, we see pretty good demand also for the next year. But in countries like Italy and the northern parts or eastern part of Europe, we see that the demand is not that strong. It's not bad, but it's definitely not strong. And Scandinavia is more or less the same. Also Spain is more or less same demand as in the past. So all in all, the situation is not bad, and that makes us a little bit concerned why the prices have dropped so much over the last weeks in Europe, despite the fact that Turkey is practically out from imports and that other countries who have a quota can hardly compete with the prices here. So we reckon that this has something to do with the overcapacity which was built up in Europe over the last months, because the prices and the profit margins were extremely interesting for the mills, and so they have, it looks like, increased the capacity utilization to take advantage of the good profits.
Thank you very much. So, next one.
Okay,
the last one is producers, please.
Good morning once again. There was a good participation yesterday's meeting, but just to give you, if I'm not mistaken, just correct me, Murat, there were about 137 participants from 52 different companies for producers side, right?
Yes.
So just to give you a little bit of information on that. As always, yesterday at the producers meeting, we talked about country-specific indicators. Everybody knows all these, like GDP rates, inflation, unemployment, capacity, utilization, exports, imports. I'm not going to go one by one, but I will just summarize it all. But the main topic, as always, since the last year and a half, was, of course, the protectionism. This is really putting a big pressure on most of the countries, especially export-dependent countries like today Turkey, because of the, I mean, really also explain all this, but US, it's not possible to export at the moment. Okay, now with the second 25 being lifted off, we have a little bit of possibility. There has been a shipment since then from Turkey to US. We are also just got the first preliminary results of the anti-dumping review. The rates probably will be coming down about 7%. This is just a preliminary finding that will take some time to be finalized, probably around 4 months or so. That would also help us if this being realized in the coming months. But the business, the way the business has been shaped is changing. Exporters become importers, importers became like exporters. Today we have talked about GCC countries like Qatar, Emirates, they are exporting. Today to Far East, like to Singapore and Hong Kong, we used to sell them. Today they have become really the exporters and competitors to us. This somehow, I don't know, we don't see the light at the end of the tunnel, but this has to be solved, otherwise everybody is going to be in a bad shape in the coming months. It's been said that Europe in general in 2019, GDP growth is expected to be around 1.2% and for 2020 plus 1.4%. Construction is also growing. Demand for rebar is up for about 2% compared to previous year. In general, in Europe, the positive is sentiment, although it's not enough. In Ukraine, positive trend in economy. GDP is growing in around the rate 3.2%, but there might be some problems, slowed down due to global trade issues. Russia, things are not as better as the other countries. Things don't seem so bright. And Turkey is going through very tough times due to these protectionist measures, plus the problems locally. Most of the producers are slowing down operations, extending maintenances. I hope this is not going to go any further. We are really hurting at the moment. And since all these our major export markets are close to us, what is left, when you look at it, is South America and Africa, and where you cannot get so much of tonnage. And we've discussed yesterday, I don't know if you have heard it, number 1 and 2 countries for Turkish exports for long products were Yemen and Israel today. So at the moment, things don't look so bright if these protectionist measures keep on like this. I talked about GCC, and that's more or less what we have discussed.
Thank you very much, Mr. Chairman. There were lots of comments. I've tried to take some notes, but let me try to recap if I can. Obviously, we have seen, as you have mentioned, Jens, we have seen dramatic price decreases on the scrap side recently. And I've taken note here that the raw material suppliers agree that the trade barriers all around the world affected growth negatively. And scrap generation has also been affected negatively due to these developments. Obviously, the protectionist measures everywhere is blocking trade and having a negative impact on the economies as well as steel trading. The raw material suppliers also mentioned about additional protectionist measures like the one introduced in Russia in the form of export quotas and licensing system, which is going to be limiting the availability of ferrous scrap in the market in the coming year as well. The slowdown in automotive industry is also affecting the whole supply chain, and I understood it's a major challenge for the recycling industry. Another challenge is once again the low water levels in Rhine River system, which is bringing along difficulty in logistics for the scrap suppliers. And obviously another problem on the logistics sides is the new IMO regulation, which has already started affecting the freight costs. Obviously, this is going to have probably bring a major health benefit, environmental benefit, but it's going to be a huge problem for trade, apparently. Another major challenge, obviously, for the raw material suppliers, scrap suppliers, is the Turkish recession, which is causing a huge decrease in ferrous scrap demand due to dramatic decline in construction industry's steel demand. Overall, I understood the scrap generation and inflow is also coming down drastically. I have noted that the scrap suppliers think it is around 15 to 20%, which will probably have an impact, an inevitable impact on the market in the coming months. I have noted that traders don't think that there is going to be a short-term solution in the US-China trade conflict. I understood they agree that it will go on as long as the current administrations will not change. So it's obviously not good news for the worldwide economies and the steel industry. I understood the traders also discussed about the review on the duties, anti-dumping duties against Turkish rebar in the US, Turkish rebar exports to the US. And the traders mentioned that it will probably bring a bit of help, but it's not going to have a huge impact on Turkish rebar sales to the US market if the preliminary rates will, if the rates will go down by the end of the review. Traders think the electric arc furnace mills have an advantageous position over the blast furnace mills nowadays. If I have noted correctly, $40 to $50 per ton, you said, Willy? So, Turkish steel industry situation is a concern for the traders, I understood. The traders mentioned that the Traders Committee chairman mentioned that the Turkish capacity utilization is probably under 50%, is down to 50%, about 50%. Therefore, the supply of material is much less in the market, but the Turkish mills are still looking for new markets and selling in Southeast Asia, Israel, Yemen, and trying to be aggressive. Chinese production is up, but traders agreed that the output is mostly consumed domestically. The Chinese mills produce steel to keep people working, and when needed, they put the material into stocks, which is having a negative impact on the prices in Chinese market. But we have not seen exports increasing yet. Brexit is another issue that traders have discussed. It has already started to have a significant impact on the automotive industry, as far as I understood, but the uncertainty is too big to make more conclusive remarks on the situation. As for markets, I noted that European situation is not bad all in all. The demand is in Germany, Belgium, Netherlands is robust, but in Italian or eastern parts of Europe, not that strong. Turkish situation is obviously known by everybody. They are practically out of the market, out of the European market at the moment. So there are some other players, other exporters in the market. Protectionism has been the major topic of discussion in producers' committee meeting yesterday. I understood it has it keeps putting a lot of pressure on exporting countries, particularly Turkey. Producers also discussed the preliminary results of the anti-dumping duty review in the US for Turkish rebar exports, wire rod exports. They believe that rates will be coming down, and when the final decision is announced in 4 months' time, you said, Mr. Chairman, right? And it will hopefully help the Turkish mills. Mr. Chairman also mentioned that the GCC countries who used to be importers in the past have become exporters today. So the market situation has changed, and as protectionism closes many doors for Turkish mills, it is becoming more and more difficult for the industry. In Europe, I have noted that the producers think the sentiment is positive. The sentiment is positive. There's certain growth, but not enough. Russia is also not as good as other countries. The situation is not as good as other countries. And Turkey, most of the producers are slowing down. They are extending maintenances, and the short-term outlook is certainly not very bright. So, thank you very much, gentlemen, for sharing the conclusions of your respective committees with us and with the audience. I would like to continue with the questions that we have collected. As I have mentioned earlier, please do stop me whenever you would like to direct a question to the chairman of the committees of IREPAS. Any questions at this point of time, or shall I start? So, may I start? The first question is for the panel. What are the chances that protectionism and the slide towards global trade wars are leading us down the path towards a full-blown recession? Are there already signals that this could happen? Who would like to start commenting? Jens?
I mean, in some areas we already have recession, like in Turkey. I mean, maybe that's isolated for Turkey, but we guaranteed see a slowdown in economic activity in many areas at the moment. So I'm not sure about if the protectionism itself will lead to recession, but the protectionism we see is not helping.
Thank you.
That's correct. I don't think there will be a winner at the end of this. I mean, if these protectionist measures stay in effect, sooner or later we will go down this path. We are already seeing its footsteps very strongly, especially as Jens rightly said in Turkey today. It's a kind of a big problem because there is not many markets left where we can export our material. Our usual export markets like US, Europe, well, it's gone. And, what is left is, as I said earlier, it's South America and Africa, where you cannot get much of a tonnage. So at the end, everybody will get hurt. I don't know when we will. I hope we don't go all the way down to this full path for recession, but who knows?
Anything you'd like to add, Willy? No? Okay. Moving on to the next question. This is for the Raw Material Suppliers Committee, Jens. After rising above $100 per ton following Vale's dam accident earlier this year, iron ore prices started to come down amid predictions that prices would decline to $80 to $85 per ton by the end of this year and to $60 to $65 per ton next year. How do you see iron ore prices going forward?
Well, the analysis that we've read is that there's still a structural deficit when it comes to iron ore supply. And we also understand, we saw that also from the presentation from ASEAN yesterday, that the growth of the blast furnace looks to be strong going forward. So the current iron ore availability is below necessary levels because of the Brazil dam catastrophe, but longer term it's difficult to say.
Thank you. Next one is for traders. If we can go to the question. Yes. What is the EU's real role in the current scenario of widespread global protectionism, really? Is it an innocent victim carried along helplessly in the wake of President Trump's protectionist drive? Or is it a willing participant quite happy with the current situation and benefiting from it? What would you say?
Well, this is pretty much an opinion question rather than one I could answer based on facts, but
yes.
Listen to Eurofair. They say it was absolutely necessary to follow the safeguard to avoid a shockwave of imports, which was going to America before, and so they just wanted to avoid that this will come over to Europe. But of course, listening to consumers, they are heavily complaining that traditional trade flows have been stopped, have been at least put to certain levels which are not healthy for our economy. And so the downstream industry is heavily complaining because of higher costs, less competitiveness in the market, and less options internationally. And so in the end of the day, we will see who is right or who is wrong. I mean, being a trader and being and standing up for free trade, of course, my personal opinion is that this is not a good idea, and certainly we should have watched before what is really going to happen after the Section 232, and then to take a decision. But okay, the lobbyists in Brussels made probably a good job.
They're also toughening the rules, changing the rules while the game is played.
And
already,
they changed the rules.
That's also kind of strange.
Correct.
Okay. Are there any other questions, any other comments from the floor on this issue? None, I guess. Yes, it's a very much opinion-based question. So thank you very much for sharing your opinion. Next question is for the producers. So, Turkish Steel Exporters Association chairman commented that the Turkish steel industry could face further distress, in particular given its struggles in the export markets. Do you agree with this view? You have already talked about it, but let me finish this question. How would you assess the current situation regarding Turkey's steel exports? What are the bright spots on the horizon for its steel export activity? Maybe you can add a few sentences for the last part.
We've already talked about all this. At the moment, I don't see any bright spot. The only bright spot is this anti-dumping review rates might be coming down around 7.5%. That would probably helping us in the States. But besides that, as we just talked, EU is even trying to toughen the rules and changing the rules of the game. So it's really, most of this is political, and I don't know how to answer, really. I really don't know what to expect. But things are not good at the moment.
Thank you. Really, let's continue with this issue of, is this out of battery or what? Ah, okay. Once again, the issue of quotas in the EU. The EU has reduced the planned increase in its steel import quotas from 5% to 3% and has approved a 30% cap both on HRC, which was subject to a global quota, and on the other countries' quotas for long steel products, which are supposed to open up for every country in the last quarter of each quota period. Turkish exporters think that the new adjustments are mainly targeting Turkish steel exports and have thus criticized the EU for supporting free trade only when it works in favor of the EU. Do you think that the EU is specifically targeting Turkey?
Yes.
Straightforward. Finished. Correct.
Nothing to add?
Well, I mean, if you look at this safeguard and if you analyze the various steps, I mean, it's so obvious. It starts from the period of investigation, yeah, and comparison. So they took off that year in which Turkey has really brought in the biggest volumes that they have excluded. So they took periods which were much older and actually not comparable, but because of that, Turkey got a relatively small quota. And then, as Murat just mentioned, during the race, they are changing the rules, and all of a sudden, you can only take 30% of the rest of the world quota, which is remaining in that last quarter, which again is only an effect because in the first race, Turkey took the 100% of the rest of the world quota, because it was the market which was competitive. It was a market which was a traditional exporter to Europe all the time. And so there are other countries where you wonder why they got such a huge quota, which probably they will not be able to use. Yeah?
It also makes it very difficult for the buyers to make a decision. Exactly. Because today, when you look at the wire rod quota, still there is 100,000 left. But nobody's
taking the chance.
Taking the chance, taking the risk. It's too risky. So still.
Yeah.
Thank you. No questions from the floor, so I go on. This one is for the raw material suppliers. Hence, despite widespread suspicion that a continued downward trend in US scrap prices may lead many scrap collectors to temporarily step away from the market, there is still supply pressure on the market for the October buy cycle. Do you foresee problems on the supply side in the US market in the short run due to the recent downtrend of prices?
Yeah, I mean, in the US, you don't have a currency that protects your collection. So when you trade in the US dollar, the full brunt of the crash in the prices is borne by the US recyclers, and that will guarantee, I mean, we discussed it a little bit yesterday as well, and it's for sure affecting the recyclers' ability to get material to their yards, and it's likely going to continue for a while. Of course, the price effect on collections is short-term, and it will likely be affecting the inflows for the coming month.
Thank you. So I go on. Next one is for the producers. In the first 7 months of the current year, we see that Turkey's steel exports increased by 13.5% year on year to 13.1 million tons. Looking more closely at the details, we see that this volume was boosted by a massive 270% year-on-year increase in semi-finished steel exports to 1 million tons. Could the share of semi-finished steel in Turkey's total finished steel exports increase even further if Turkish suppliers continue to struggle in the export markets?
Yes, it is possible, and we can see that in our numbers. When you look at the figures exported, you see more billets exported than the previous year. And if this thing keeps going on like this, we will see more and more semi-finished products being exported. That's for sure.
Thank you. So next question is once again for the traders, and once again on the EU market. It seems Belarus has taken advantage of the quota system imposed by the EU, as it has been able to increase its reinforcing bar exports to the EU market. Do you expect further measures to be taken against exports from Belarus to the EU?
Well, I should better understand which product is meant, because on rebars I can definitely not say that. We all know that Belarus has a 10.6% anti-dumping duty for the non-high fatigue performing rebars, so the only optional markets for them to achieve are UK and Ireland, and so maybe there they have an advantage right now, because they are as a non-quota country, they can use the rest of the quota. But honestly, I've checked with our people, and well, there hasn't been such a big change or big increase, which is really notable from or any benefit from that quota, to be honest.
Thank you. Still no questions from the floor. Next question is for the raw material suppliers. Jens, you have already mentioned a little bit about the situation, but let me read the question. After Ukraine imposed an export duty on scrap in April, Russia started to implement a quota system on scrap exports in early September, depending on the exporting region. How do you expect this will affect global ferrous scrap trading?
Yeah, so the licenses are issued in the different regions of Russia, but different quotas. So in some areas it's 80% of the last year's average, and some areas it's 50%, and in some areas there's no licenses. So it's guaranteed to affect the availability of scrap in the next year at least by 50%, or there was a little bit of confusion around it, but at least 30 to 50% lower exports of scrap.
Thank you. Next question is for the producers, once again about Turkish exports, Mr. Chairman. In May, the US reduced the 50% duty on Turkish steel exports back to 25%, and after a long interval, Turkish exporters finally booked their first rebar sale to the US towards the end of August. There's also an ongoing review of AD and CVD measures against Turkish rebar imports, and lower preliminary rates have been announced. Moreover, there are rumors that the US may replace the tariffs with quotas. What is your prediction?
We also have talked about it, but there are rumors that's correct as far as I know. Tariffs with quota to be replaced. Of course, that would be on our advantage to have the quota. I don't know which yield they'll take into consideration when they figure out what quota to be given. But at the end, if this happens, of course, it will benefit to us. But I don't know if it's going to go through or not. There are just talks. I hope it comes through.
So, do you think it's only rumors, or?
No, they are talking about it, I know, but I just don't want to say anything because I don't know what's going to come out of it.
The likelihood is very much unknown.
I don't know. It's politics behind this. They might say yes, but I don't know what they would ask in return. So it's just, don't know.
Okay, thank you very much. Any questions? No? Okay. Next one is for the panel. Anybody whoever wants to comment, please. One significant bright spot amid so many negative developments is that domestic consumption in China has so far managed to keep the country's steel exports under control, with Chinese steel suppliers staying focused on meeting the needs of their domestic market. Their absence from the export markets is a decisive factor which helps buoy up sentiment and in the global long steel market. Excuse me. With the Chinese government continuing to provide support for their domestic market, can we safely say that Chinese steel suppliers will remain more or less absent from the export markets for the foreseeable future?
Well, the domestic demand was extremely high in China, but we believe it's running a bit out of steam. And so there is a probability that we will see them in the export market again. But with the current cost on iron ore and knowing that the majority of the Chinese mills are running on iron ore, we think that the level of threat is very limited.
Any other comments from the panel?
I see quite a lot of new asset buildup by Chinese outside of China also, so they could also export from those areas instead of from the mainland China going forward.
Thank you. So, next question is on ASEAN region. Yesterday we have been able to listen to Mr. Yeo Wee-jin, and this question is for the traders, really. What's your assessment of the ASEAN region? The region's Steel Association has forecast a 4.6% rise in steel consumption in 2019 and a 6% increase in 2020. The region's steel imports in the first half of this year increased by 5.6% to 25.08 million tons. In the billet segment alone, we see suppliers as varied as the CIS, India, Turkey, and Iran, all competing for a share in this market. Will China remain absent from the ASEAN market? Will the region continue to remain a beacon of free trade amid so much protectionism globally? Which suppliers are best positioned to meet the region's import needs? So many questions.
Well, for long products, China will not be entirely absent from the market, but definitely, as we analyzed and as we heard yesterday, right now they can hardly compete with Turkey and also with Middle East countries, which are offering at prices on CIF basis, which can be done by China maybe on FOB levels. So they will not be the price driver in that markets, but they have to follow the Turkish and the Middle East pricings. And in general, we do not really see Asia as a beacon of free trade because only Singapore and Hong Kong are areas like that. But Thailand has duties on certain wire products. In the Philippines, Sri Lanka, and Indonesia, you also have protectional measures. Malaysia has investigations going on and have already dumped most of the Chinese products. So on top, unless you are part of the free trade agreement, you have to pay duty to Malaysia anyhow. And the only product which is really free tradable is billets in order to protect the re-rollers. So Turkey is, in our opinion, obviously better positioned at this stage today. And however, we guess it's more out of necessity rather than on desire.
Thank you very much. So still no questions from the floor. It seems we are covering everything, every issue in the market as good as possible. So next question is for producers, this time not on Turkey, this time it's on Egypt. As per reports, it has been proposed to keep the safeguard duty against billet imports in Egypt in place for 3 years, but at the rate of 7% for the first year, with its reduction to 5% and 3% in the following 2 years, instead of the existing 15% duty, which is to expire on October 15th. How would the market react if this turns out to be the case? First of all, I may add, do you share this expectation?
Well, this has been said, I hope it goes through, that because it would help, I think, because Egypt traditionally is a billet import market. They import billets from Turkey and from Black Sea. And this is like, in the first year, it's like more than 50% reduction from 15 to 7%, then to 5 and then to 3. And I believe that would give importers in Egypt a relief and accelerate billet imports to Egypt itself. So hopefully it works out for the best.
Thank you.
That's to be seen, I don't know.
Anybody from the floor to add any comments on this issue? No? Okay. Next question is for the Raw Material Suppliers Committee, Jens. What's the current situation in the financing of trading of scrap and or other raw materials?
So the financing is okay. I guess 5 years ago we had this financing was canceled for Russian exports of scrap from the banks, but now instead we have protectionist measures. So that's sort of the new issue or the latest issue for the trading of raw materials. So, but the financing is not a problem at the moment. For general trade, this kind of dock financing of scrap is no more, but the regular letter of credit flows is good.
Thank you very much. And Mr. Baysal, can we have the microphone?
I have a question for Jens actually on the subject of scrap. It is well accepted that if there is a further reduction in the pricing of scrap, there will be a collection issue, which is what you said, and we agree. But we would like to know what is the current situation, current stocks that's available in the US and in EU, which will really which has to still go on and keep the prices low.
Yeah, this is a topic we discussed a little bit yesterday. Of course, I don't have any figures, but the weight on the market at the moment is prompt shipments. I mean, if you have availability that needs to be shipped because of either financing constraints or of space constraints, perhaps, that needs to be shipped prompt, that is weighing on the market at the moment is what the sort of the consensus of the meeting was. How much is still readily available was not easy to work out, but of course that's having a tough weight on the market.
Well, really, maybe the question is, how long do you think these stocks will last before they really have to have collection issues coming in?
Well, there is collection issues. We heard of UK down 50% in some areas. We heard of US also down fairly dramatically, and we have ourselves in the Northern Europe at least 20% reduction of inflows. So if there's less demand and there's less material coming in, of course you can also wait a little bit longer, but so it's challenging to say nobody, I think, waits for a full cargo and then tries to sell. So it's weighing on the market that there was a lot of companies that have been stuck at this really dramatic time. In the last 8 weeks, I think we've seen at least $70 or something cut off the price. So at least 20% more of the price is gone. I don't know how much further we can go. I mean, we can go as far as possible. I mean, I don't know where the market drops to, but it's a challenge.
Thank you.
Thank you very much. No more questions at this time. So actually I have only one question left. This is probably the golden question. You have already started discussing a bit about it. This is for the panel. Every day we hear of continuously falling prices, whether on the raw material side or on the finished product side. When are all these downward price movements going to run out of steam, and what are the main factors that will lead to a turnaround in the price trends?
Well, I could just fill out that you have, I mean, the main driver of the prices are fundamental demand coming down, which we've seen for a while now. But there's also a factor of tactical demand. So when you see that prices are in a negative run, you can postpone as far as possible. You perhaps instead of selling a normal tonnage, you split it up, and you postpone as far as possible because you feel that we know that we can buy it cheaper in the next month or the weeks ahead. So this sort of tactical driver in the market at the moment feels like it's also postponing the ability for the market to settle.
Thank you. Really?
Fully agree with Jens, and we see the same on the finished product side. Never put your hand under a falling knife, as we say. So if you see prices are dropping, so you don't necessarily buy your next quarter demand, but you buy in bits and pieces on your stock situation. But we also realize that the drop we've seen here in Europe over the last 30 days came or lost steam, and at the same time we don't believe, also because of seasonal reasons, we are heading now to the fourth quarter. Traditionally this is a quarter with the lowest intake of and upbuilding of inventories, so we don't believe that it will likewise increase that much as it came off, but we believe that it will go sidewise, and to bring it really to a change is either an increase of consumption, which we hardly see right now, so it's probably more, it has to come from a cutting of production.
Thank you.
I mean, my colleagues are very right. First of all, it's a matter of supply and demand issue. And you know, the problem in Turkey is being one of the biggest scrap importers. We're working with less than 50% of the capacity. And also this cannot be tolerated anymore, and you see the margin between scrap and finished product, it's so tight, no one can live with these margins, and it's very hard to go on with just saving the day on every side. I think it's the same situation for the scrap sellers today, so this has to turn around very soon, I see.
Very soon, hopefully. Thank you very much. Any other questions from the floor? No questions, so hopefully everybody is happy with what they have heard so far. Once again, thank you very much, gentlemen. I'm very glad to have your comments and I appreciate your contribution this morning. Mr. Björkman, Mr. Alf, Mr. Cebecioğlu, thank you very much once again. I also would like to thank our distinguished speakers who have shared their expertise and opinion throughout the course of these 2 days with us. While we are closing this session and this meeting, I also would like to thank our sponsors, İçtaş, our platinum sponsor, Liberty House, Alex Stewart International, Belgian Scrap Terminal, Muntajat, Euroband, and Turkish Steel Exporters Association. And last but not the least, I also would like to thank you all for your attendance, for your attention and participation throughout these 2 days. Hope to see you in 6 months' time in Belgrade. Thank you very much.